Welcome everyone. Today we're diving into the latest housing affordability snapshot from the National Bank of Canada. And for the record, this is August 23rd of 2024. Now, while the numbers might suggest a continued improvement in affordability across Canada, many of you experiencing the housing market firsthand might not feel that way. So let's break down the details and see if we can figure out why. Now, the latest report released by the National Bank economists Kyle Doms and Alexandre Ducharme reveals that housing affordability in Canada actually improved in the second quarter of 2024. Now, this improvement comes despite a slight increase in seasonally adjusted home prices, which ticked up 0.4% from the previous quarter, so not too bad. And several factors contributed to the positive shift. Notably, the benchmark mortgage rate for a 5-year term dropped by 11 basis points during the quarter. Additionally, median household income rose by 1.2%. Now, these factors combined to enhance affordability as reflected in the mortgage payment as a percentage of income, or MPPI, which dipped by 1.1 percentage points to 57.9% between the first and second quarters of the year. Get all that? Now, the improvement wasn't just a national trend, it was widespread across the country. In fact, 8 out of 10 major markets saw a decline in MPPI in the second quarter. The markets that showed the most improvement include Hamilton, Toronto, Victoria, Ottawa, Gatineau, and Vancouver. However, Calgary and Edmonton saw a slight deterioration in affordability. Now, while this all sounds promising, it's important to remember the context. We're emerging from a period where housing affordability took a significant hit, with high mortgage rates and home prices pushing affordability to some of its worst levels, even in major Canadian markets like Toronto, Victoria, Ottawa, Montreal. So when we say more affordable, it doesn't necessarily mean that housing is actually now affordable for the average consumer. For instance, while Hamilton, hometown here, saw the most significant improvement last quarter with MPPI rising by 2.9 percentage points to 65.5%, that figure is still well above its long-run average of 41%. Similarly, Greater Toronto's MPPI dipped by 2.2 percentage points to 80.7%, but this is still far higher than the city's historical average of 52.9%. Now, Vancouver remains the least affordable city in Canada, no shock there, with an MPPI of 94.5%, even after a 1.1 percentage point improvement. Now, the situation isn't much better in other major markets like Victoria, Ottawa, Montreal, and Winnipeg, where affordability remains a significant challenge. Now, the economist Ducharme points out that despite the quarter-over-quarter improvement, the national MPPI is still well above pre-pandemic levels. And locally, mortgage payments as a proportion of income remain unequivocally high, making it difficult for consumers to feel that their situation has improved. Moreover, other factors like rising insurance and property tax costs, combined with low vacancy rates, driving up rental prices, further complicate the picture of housing affordability. Now, looking ahead, there's some hope on the horizon. National Bank economists predict that the Bank of Canada might ease its policy rate by another 150 basis points over the next 12 months, potentially bringing it down to 3%. Remember those glory days? By the third quarter of 2025, they expect the rate to be even at 2.75%. Now, if this happens, it could significantly alleviate the financing burden, bringing affordability closer to pre-pandemic levels. However, there are risks with that. As you know, lower interest rates could drive home prices higher again, and the economy and labor market are expected to remain soft in the coming months, despite some pretty good economic indicators lately. And this will offer little support for price growth. Payment shocks from upcoming renewals could also keep a lid on price increases moving forward. It's complicated. In conclusion, while there are signs of improvement in housing affordability, again, it's crucial to approach these developments with a healthy dose of caution. The market remains challenging, and quote-unquote more affordable doesn't necessarily mean affordable. Thanks for tuning in. I hope that you found this helpful. Please, if you did, like, subscribe, and moving forward, stay informed, stay tuned in, and take care.